Today's Federal Reserve decision is shaping up to be one of the more important central bank events of the year, not because anyone expects a change in interest rates, but because it marks Kevin Warsh's first meeting as Fed chair. Markets are overwhelmingly pricing in no change to policy, with rates expected to remain in the 3.5 to 3.75% range. As a result, the focus will be less on the decision itself and much more on the Fed's updated projections, the dot plot, and perhaps most importantly, Warsh's first press conference. One of the key questions is whether the Fed begins laying the groundwork for a more hawkish policy path. Inflation remains elevated, the labor market continues to show resilience, and recent data has done little to justify a return to rate cuts. As a result, there is growing speculation the Fed could remove its long-standing easing bias and potentially revise higher its 2026 interest rate projections. Such a move would reinforce the market's current view that the next move from the Fed could ultimately be a hike rather than a cut. That said, the market reaction may ultimately come down to Warsh himself. Since taking over as chair, Warsh has signaled discomfort with the Federal Reserve's heavy reliance on forward guidance and extensive communication. Investors will be listening closely for any indication that he intends to move the institution towards a framework that places less emphasis on the dot plot and less emphasis on providing detailed guidance about future meetings. In many respects, today may tell us as much about how the Fed will communicate under Warsh as it does about monetary policy itself. From a market perspective, the dollar enters the decision with downside risks. The easing in geopolitical tensions following the U.S.-Iran agreement and the decline in oil prices have reduced one of the more important sources of recent inflation pressure. At the same time, interest rate markets are still pricing in additional tightening by year-end. If the Fed validates those expectations through a balanced statement and a slightly more hawkish set of projections, the dollar could remain supported. However, if investors come away with the impression that Warsh is more willing to look through recent inflation pressures or is subtly leaning toward accommodation down the road, the dollar could come under meaningful pressure. Ultimately, what matters most today may not be the dots, the statement, or even the forecasts. It may be the first real insight into how Kevin Warsh intends to lead the Federal Reserve. Markets can adapt to a policy path. What they struggle with is uncertainty around the framework itself. That is why today's press conference could prove to be the most consequential part of the entire event. That's all for now.